Hi, I'm Peter Rose, founder of Longwood Currency Trading. How to build profitable Forex trading rules. I mean, this is a question I get all the time is, well, what do I do? Well, what you do is dependent on the rules that you create. And those rules are found in your trading plan. And the parameters for those rules are found within the framework that your trading plan sits. If that doesn't make any sense to you, you really better do some research and understand how these components of learning how to trade and being successful in trading will fit together or are utilized. Because without that continuity to your thought process of developing rules in a structured environment, your rules aren't going to be very good. That's not what the point of the video is going to be, but it's the specific way that you build a trading rule. Now look, I'm coming at this from a little bit different background than most of the folks that you're going to be exposed to. I've got a bachelor's degree in physics, almost a minor in math. I had a 33-year career as a senior software engineer developing complex business applications. And I've been a real estate investor for 40 years, a retired millionaire as a real estate investor. And I've been studying the currency markets since 2007, but I've been involved in the financial markets in one way or another since the mid-1970s. So that's where this discussion is going to come from and why you won't find it anywhere else. In software engineering, programs are built through executing rules. I want to register this new employee into the company's system. Well, what are the rules that determines whether that employee is going to get registered in? Is he old enough? Does he have the proper qualifications? As you're registering them through, does he live in a country that is excluded from the employee list? For example, a security clearance process. I mean, I went through all that stuff. If you had any kind of background issues, you wouldn't get your security clearance to get your job. So there's all these kinds of issues that need rules around them. Or I developed a flight registration, airline flight registration system, where there's all sorts of rules. I mean, if you take this flight, you're entitled to these benefits at lunch or whatever. Or if you get 2 hops involved and one is longer than 4 hours, you get a full meal. There's all those kinds of things. Life is based on rules. See the hexagonal sign that's red? That means stop. Of course, if you live in Italy, a red light or something, that's just a suggestion, right? That's from Under the Tuscan Sun movie. Man. We try to have fun. Rules. They're behind everything. So if you have shitty rules, guess what's going to happen? 90% of the traders lose 90% of their money in 90 days. That's a statistic that was developed through an analysis by a major Forex broker many years ago that studied and analyzed 43 million of their client transactions, over 25,000 clients. And they found that though 72% of the trades were profitable, the clients still lost money in the end, because obviously they lost more money than they made 72% of the time. Why is that? Is everybody stupid? No, it's because you watch these YouTube videos and you get your education from there. It's the education that's the problem. Most of the educators either don't know what they're doing, or they don't know how to teach it, or they're just trying to fade you. There's quite a few that are valid, but you have to have experience in order to understand what they're saying and the stuff that they're using in order to develop their systems. And so in software engineering, that wouldn't make it. You wouldn't survive if that was your ability, your education as an educator, or as someone that was espousing great wisdom on YouTube channels or something. That kind of attitude and ignorance is not going to make you any money in real estate either. you have to have not only rules, but you have to understand how to build those rules. Let me just preface this with a definition that I'm going to be using, because all of my rules are built upon the software engineering concept of the event response model. The event response model is I create some event. I do something, and to that there's a response. I throw a baseball. That's the event, and it breaks the window. That's the response. Okay, and that's a rule. However, if you get the rule order mixed up as a response event, then though the rule will make sense, it's not going to work because you're doing it at the wrong time. If you've watched my videos before, you understand that in order for me to build a rule, I have to answer 3 questions. What, how, and when. What do I need to know to solve this problem? How would I solve that problem? And when do I solve it? If my problem was planting a garden, the what would be, I got a shovel and I got this garden and I got these seeds. That's the what. How do I plant that garden? Well, I got to dig a hole with the shovel and then I got to put the seeds in the ground. If I tried to do that in the middle of the winter, I wouldn't be very successful. It's that when component that's really the most critical, because that's really that response part. So if you don't get that in the correct order when you're building your rule, and the solution for a rule is the when aspect. Let me give you a for instance here. Bob ducked when he heard the sound of the gun go off. Now that makes sense, right? Bob ducked because he heard a gun go off. Wouldn't you duck if you heard a gun go off? Yeah, you would. But that's the wrong order. You don't duck when the gun goes off. When the gun goes off, then you duck. So Bob ducked when the gun went off is incorrect. When the gun went off, Bob ducked. That's the correct way that you form that rule or that event. You have an event, the gun goes off, you have a response, Bob ducks. If you get that wrong in your currency trading rule building, you're going to screw it up. That's the event response model, and that's what I bring to the table through the software engineering background that I have and also the real estate background. If you look at your life, that's how you solve problems. The thrust of anything that I teach, whether that's a consulting or a mentoring process through a course or something, they're not instant things. It takes, the course that I have is 500 pages of manuals that I do consulting with. It isn't done in 30 days. It takes 3 to 6 months that I work with somebody in order to lay all this stuff out. You can't just tell somebody, oh, here's an event response model, and this is how you form your rules. You got to have the gun going off before Bob ducks. How do you migrate that into how you're building your trading plan and the rules that go for the solution sets of the 3 phases of the life cycle of a position? Right? Watch my videos because I talk extensively about the life cycle of a currency position. You have entry analysis, you have position management, and you have exit methodology. Each one of those are phases. Each phase has to have solutions to the answer of what, how, and when. There may be several issues in each phase that have what, how, when problems that need to be solved, which means you need a rule for it. If you have 15 rules in your entry analysis stage, and you would get that by having the analysis of 3 indicators. For example, if you're using 3 indicators, you have 21 different permutations that you can put those three indicators through. If you had 5 indicators, you'd have 325 different permutations that you could order those indicators in. So you have to figure out what rules are important. Remember, you're basing your rules against the stuff that's there on the screen that you're looking at, that you're using. I've simplified all that. It just doesn't make any sense. As a physicist and a mathematician, you try to take complex problems, and as a software engineer, you take a complex problem like registering a new employee, which is a complex problem, and you break it down into sections. You create a solution for each section, and then you tie the sections together through communication. That's message transport, which is at the root. Message transport in software engineering is at the root of the event response model. That's how you build your applications. Oh my God. Now there's a lot of people that do this intuitively. Are you that person? Well, maybe you are. Maybe you just need somebody like me to communicate with you through email, to kind of put the nodes, the signposts out for you, and you go, oh shit, I can tie that. Yeah, that's right, I got that. I can tie all those together. Chances are that's not going to be the case. You're going to need somebody to show you how to step through all that stuff. That's why I have a course, and that's why it's really expensive, because I'm teaching you a life skill. You want to make $30,000 a year from your trading, or $100,000 a year from your trading, you're not going to do it on a fucking $10,000 account. You're not. And you're not going to learn how to do it in 15 minutes with a friggin' setup recipe that somebody shows you with 3 indicators. That isn't the way it works. Guys, if that was the way that it worked, why do 90% of the traders fail? Think about that. Are 90% of the people stupid and you're smart and you think you're going to beat those odds? I don't think so. Look, I'm 73 years old. I've been looking at financial markets since the mid-1970s. You can listen to what I'm saying and believe it or not, it doesn't make any difference to me, because I'm not in the business to sell courses. I'm not trying to convince you to do anything. I don't give a shit. I do this channel for the 5 people that listen to me, and I can help them. And if you need the coursework, it's expensive, and so nobody's going to want to pay that. And that's okay, because I'm not there to drag you across the finish line. Do you realize that if you took a course in learning computer programming, boot camp computer programming, that's $15,000 to learn how to do that? If you were going to study how to build websites and do an e-commerce platform, my son's doing that right now, and he's with a really reputable company. He's probably $20,000 into it, with all the things that are involved. What do you think your attorney is going to charge you in order to beat a DUI case, or to settle a somebody was executor of an estate of a person that passed away. The estate was only the person didn't have any money. The whole estate was worth $20,000, but it cost $2,500, I think, just to do for an attorney to file a simple paperwork to the probate department. $2,500, plus all the running around. $4,000. It cost about $5,000 to settle that estate. I mean, you do it yourself. The person that I know, they did that. They tried to do it themselves. They spent months getting paperwork together and running around and doing things. It got scrambled up. Didn't get it in the right order. Took the stuff to the attorney. He had to go back and redo everything. If you want to be successful at trading, you better learn how to limit the amount of problems that you're trying to solve, so that becomes finite instead of infinite. And you better know the solution of how to build a rule in order to solve that problem. And then you need to learn how to have the rules communicate with each other in what we call a loosely coupled, highly cohesive environment. You can look those up. I'm not going to go into software engineering definitions with you. But that's the solution set for object-oriented development for solving complex problems. So in your currency trading, you know that you're going to have a rule. When do you enter a trade? Let's make that's a rule. When do you enter a trade? Is it that I enter the trade when the fast MA crosses the slow MA? No. It's when the fast MA crosses the slow MA, I enter the trade. That's putting the problem in the correct order. You have to look at things differently, or you'll get the time wrong. You'll get the when component wrong. And that's really what the rule solves. That's the point of my video, is the rules are solving the when component. And it takes a long time to get somebody to, well, not a long time. I mean, even as many pages as the course and stuff is, if the person is just doing the course and not paying any attention to me. I mean, I got karate students that study karate with me, and they don't ask me any questions, and it takes them forever to do anything. You just take the information and you fester with it, and it doesn't do you any good. You have to have somebody show you how to put the shit together. I've had people save their lives because of the martial arts training that I have given them. I've been involved in karate for 55 years. Every now and then I get somebody come in there, a black belt or something, and they go, oh, wow, this doesn't make any sense, blah, 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 blah. Okay, here, get out with one of my guys and grab a hold of him and see what happens. Look, everything that there is in nature makes logical sense out of the confusion of the mess that's there. If you just look at the tree line out there, all you see is a tree line that's dark. But if you walk up to the tree line, boom, bang, you bump into this thing. What's that? It's called a tree. Well, what's the tree? So you have to learn how to find the things that are going to be specifically part of the problem that you're trying to solve. In software engineering, we call that scope creep. When you start solving a problem and then you think of something else that may happen and then you add that into your problem. That's what produces horrible, horrible code. And it produces horrible, horrible results in your currency trading if you don't get the number of rules that you're dealing with filtered down to a very manageable amount, so that the rule becomes an event response model. But the things that go to make up that rule, that's what you have to minimize, because you're going to end up with one rule. But if you have 5 different things that you're looking at in order to create that rule, what's going to happen? You're going to have 325 different permutations that you're going to have to filter through in that matrix to figure out which the best permutation is. I've done the computer simulations, for example, for staging in. I have a whole section in the course called a large scale lot size positions trading. In other words, trading with large numbers of lots. You're going to stage those in over a period of time. Well, there's certain parameters to that. What's the distance between the last time you staged a lot in and the next time? Where are your entry points? How far are those entry points apart? How many lots are you going to stage? Is that number of lots going to change with time or distance? Where do you put your stop in relationship to either the current price or to the last stage in point? So I've just covered 4 different parameters in there. So I've got 21, let's call it 3. I've got 21 different permutations over that. and I'm going to run, so I wrote the program to do that. I have this matrix of solutions, and I wrote the computer program to do that, and I've run 100,000 iterations through each one of those, or yeah, 100,000 iterations, 10,000, because you don't need to run, you get a statistically sound probability with about 300 to 500 iterations. You don't even need to go to 1,000 or 10,000. But I ran my simulations 1,000 times for each of those permutations. So I had, I whittled it down to 3. So I had 3 parameters. So I'm going through 21 different combinations 1,000 times each. So that gave me this statistical model of how I should build my rule for developing that. Now, if you don't know how to write a computer program, you're not going to be able to deal with that many different parameters. This is a very complex problem. The staging problem is a very complex problem, and you can get really good results with totally impractical parameters. So, I mean, if you set your stop 3 pips below where your last stage point is, you're only going to lose 3 pips on that value. The problem is you're going to get hit 3 pips 85% of the time. So setting it 3 pips away doesn't make any sense. Even though the computer application run 1,000 times and say, oh, well, you're only using 3 pips, and when you win, you're going to win 30 or 50. You have to be really careful. And when you're looking at these videos of these other guys talking about how you should do this, or you're listening to them when they're giving you advice, you have to bear in mind that they've already learned all of this stuff in the background, and they're only able to reach into that background and say, oh, here's a Fibonacci thing, you want to try to use this. And if this Fibonacci thing lines up with the support resistance lines, or the RSI is running hot with this particular thing, and the fast MA crosses the slow MA, and the fast MA needs to be an exponential MA as opposed to a simple moving average, then you have blah, 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 and see how simple it all is. It's not fucking simple, because it isn't any of those indicators that the person is really using in order to set their entry point or their take profit point. It's their experience of looking at the market as a whole that enables them, and they've lost a lot of money, and enables them to do that. I lost $40,000 when I started because I listened to all these people. And I had to step back from this and say, what is the problem? What's the real problem I'm trying to solve? Let me use my software engineering background and my real estate, 40 years in real estate background. Let me look at this as a problem. I had $5,000 left in my account after losing that $40,000. I doubled that $5,000 in just about 4.5 months. I was $200 short of doubling that account, and I thought, oh, I doubled it. And I threw another $10,000 into the account and went on from there. But once I figured out what the rules were, that filtered out all the crap and said, well, wait a minute. Everybody that's talking about stuff is inverted this event response model that I've used successfully for 33 years at software engineering. How about if I use an event response model to determine the when component of this what, how, when conundrum of building rules? And that's how I doubled that account. Now, the fact that I doubled the $5,000 account doesn't necessarily mean I'm going to take a $100,000 account and double that. Although last year I almost did that. Actually, at one point I was 91% up. But I'm not trading to pay the light bill or whatever. I'm using my rules changed. The when component is changed so that when an opportunity presents itself, I push all my chips to the center of the table. So I had a horrendous loss at the end of the year. I had to take the loss, otherwise I would have paid taxes on the phantom gains. And then if I would have lost that money, I would have been really in deep shit. So I just took the hit. But I still made 46% on my money. I got the when component wrong, and I constantly do that as I'm working in these larger lot sizes because I've changed what the profit is. Whereas when I'm working with somebody that's getting started, it's a whole different thing. Hey, let's learn just how to trade first. Let's learn the mechanics of the trading. Then let's learn how to put those pieces together so that it makes sense as to how you build your rules and stuff. Then you can jump to a $10,000 account. You can try to make some money with that, but you have to stay within those generic parameters. Now, how long does that take somebody to do? Well, you know, maybe a month. Might take 3 months of time. It just depends on how much experience you have and what your other background is to relate to this stuff. You know, and as somebody that can look through these manuals and talk with me, and phew, they got it. And what they do with it after that, I mean, I don't know, because they don't communicate with me. The whole point in me teaching is to do it the way that I teach martial arts. I don't just teach skills and then you're gone. Once you're a student for life. If you want that. I've got students that have been with me for 40 years. Many of them at 20 years and 30 years. And I communicate with them all the time. So that is the way, that's an educationally sound method of presenting material. And that's the way that I do it in currency trading, because that's the way you need to do it. You need to work with folks on it, because I can't convey to you how I do it. Because how I do it is not how you're going to do it. But the when component is really important. The what component is really easy to teach. I teach that in about 2 hours, give you a reference to read. You read 50 pages, you know all the what stuff. Now, learning how to apply that will take you a little bit longer. But the reason for that is that there's so much information out there. If you don't know what's important and what's not important, you get bogged down in all that stuff. I got people emailing me all the time asking me these compounding questions and staging questions and all this other stuff. And, well, how big is your account? How long have you been trading? Well, yeah, I got 3 minis, or I'm trading into $10,000, $20,000 account, and I've been trading for a couple of years and I don't get it. No shit, because you're trying to solve the wrong fucking problem. Oh, man. And you don't have the background to build the correct rules. So I'm trying to help you with the channel. I'm not trying to convince you to take my course, but to pay attention to what the reality of the currency market itself is. It's not like the stock market. You may be able to do indicators and patterns and all that crap in stocks, but you can't migrate that stuff into the currency market, because the currency market is different. It's a different market for a different purpose. If you don't get that, then the rules that you're building are for stock market. That's like you're a race car driver and you have certain rules for race car driving. You're going to take those rules, you're going to try to apply those into the currency market or stock market. It doesn't work. What might work is your risk management and your fear and all that other kind of stuff. There's certain things in our lives that we bring into the currency trading process, and there's certain things that we leave out. So you need that particular type of filtering of information in order to help you build those rules. And that's, most of the time I can help folks just for no charge, just in email. I like communicating with folks in email because it takes you time in order to sit down and write an email where in a comment you just go, oh, show me your setup, or show me this. Yeah, right. There's no setups. And nothing I can do for you if you think that that's the way you're going to learn how to trade. There's no hope for you. But for you to take the time to sit down and email me, I will sit and I will spend some time responding to you in an email if you're intelligent and respectful and it looks like you really are interested in doing something. But I can't tell you the number of people that send me an email, and I'll sit down there for 20 minutes or so crafting a nice response to them, and I never fucking hear from them again. That's disrespectful. And if I ever did hear from them again, guess what kind of response I'll give you. You get what you put out. This is such a valuable skill to have. If you learn medical technology to be any type of medical field by going to college or your 2-year associate's degree in nursing, or getting an LPN degree or whatever, those are skills that are going to pay you for the rest of your life. That's why people go into hock for $100,000 or $200,000 taking a 4-year college degree, because they know that is going to start with a $50,000 a year job. There'll be $60,000 3 years later. There'll be $80,000, and pretty soon, over a 4-year period of time, they will have paid back what the college education cost them, and after that, you're going fine. You have to invest money in your education. If you're a currency trader and you don't want to invest any money in the training, then pay attention to the folks that know what they're doing and sit down and try to figure this stuff out. But if you don't have the education or the life experience in order to put these pieces into the correct order, it's going to be hard for you. That's the issue. That's the problem, right? And so, how to build profitable Forex trading rules? There's a process that goes around a whole bunch of stuff that leads up to the point where you have the limited amount of information that you need in order to create a rule. The point of the video is to say, when you build your rules, build them within the construct of an event response model, and you'll have a successful rule. And you'll notice that right away, because guess what? It'll make money. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.